let's see what Carol Roth thinks about it. Let's see what consumers are doing. It is a new year after all. So joining me now, our friend who needs no more intro on this show, recovering investment banker, author of the book, The War on Small Business, my friend Carol Roth. All right, Carol, we just had Christmas. We just had the New Year's, just had Hanukkah and Kwanzaa and every other holiday they mix in there. Did we spend any money in this country?
We did. We love to consume in this country. As you mentioned, our economy is about 70% consumer based. So what the consumer does has a big impact on the overall economy. We just came out of the retail sales season for all of those holidays that you mentioned. And I think the technical financial term for how we did is meh. MEH, meh. So basically, retail sales increased about 7.6%, which is a little bit less than last year. The challenge is, as you can imagine, those numbers are not adjusted for inflation. So that means that the consumer had to spend more, but the actual inflation adjusted impact on the economy was about exactly even since last year. The big challenge, Jesse, is how the consumer is financing all of this. And they're basically financing this by killing their own wealth. We had savings for consumers, personal savings, that peaked in about September of 2021 at about 2.3 trillion. That has come down by the third quarter. So before the holiday season, third quarter of 2022 was about 1.5 trillion. And if you ask the heads of the big banks, it gets worse. If you ask the heads of the big banks and the economists when that's all going to run out, that is going to be the middle of this year. So it means that people are saving less. They're putting more on their credit cards. Credit card debt is nearing $1 trillion. And because people have jobs and because they have this wealth effect, because their housing prices have generally increased over time, it means that the consumers are dipping into their own wealth to finance keeping the economy afloat, which really takes us down the path of you owning nothing.
Okay, well, this is all this is very scary, and we have a lot to unpack here. I want to focus on something a little bit different first along these same lines. Okay, Carol, so this is what I take from that. When I hear you tell me people are draining their savings, people are putting all the money on the credit card, what I hear is people are worth less because of inflation, yet they're trying to maintain the same standard of living they had before with their dollar going, a lot shorter distance than it was before. Do I have that about right?
You do, and there are a couple of reasons for that. One is because the job market is still robust. We have the supply-demand imbalance in the jobs market. So more people have jobs and their wages are increasing, although it's not keeping pace with inflation. But if people aren't seeing, I'm getting laid off and I'm not going to have a job, they feel more empowered to spend. And then because their housing values have increased, they figure, maybe I can take a home equity line of credit, or maybe, I have more wealth than I think that I do. And then they're going in and they're dipping in and they're taking on more debt. So they really are killing that personal wealth, like you say, to keep up with the Joneses or the Kardashians or the Fed or the government or whoever the heck it is that they're keeping up with. But it is all on their backs. And they're feeling like they're going to be okay, but really their net worth is going down substantially. And as I said, you're going to end up owning nothing.
Just as a quick side note, sorry, Carol, I just have to get this out there. It feels like an appropriate time to tell people. I had a little talk with the guy I invest with today, everybody, and we had a little bit of money set aside after Christmas. We wanted to invest, as we try to do in our house. Yeah. And we could have picked a savings account or we could have picked the market. And I said, it's up to you. What do you think? And he said, let's stick with the savings account for a few months. So just a heads up, everybody, that's the finance advice I'm getting from somebody who knows. Anyway, Carol, all right. People are really taking out home equity loans, Carol?
Yeah, so we're starting to see things like that. As we said, with the credit card debt, we're approaching $1 trillion in credit card debt. And then we were going to start to see more people dipping into their home equity that they have, kind of a repeat of some of the bad behaviors of the past, because the home prices have been inflated so much by all the money printing, by all the Fed intervention, by bad government policy. So they feel like, okay, well, this is wealth that I've earned and I can use it. But again, then you're not building wealth. You're taking that money and you're spending it, and then it's gonzo. And there's no guarantee that the housing prices are going to continue to move in the same direction.
Carol, what should people be doing with their money? Because look, it is a difficult thing to go through at a period of time in your life where your standard of living is going down. I've actually been there before. I've been out of work, and it sucks. No, we're not going to Red Lobster this Friday. Actually, we're having Kraft Mac again. It is difficult, but what should you do?
Well, first of all, I want to thank you for your personal sacrifice. I know how much Red Lobster means to you, but what a good example you're setting for everybody by willing to have an austere life. And I think that's the reality here. Do not take on more debt. Cut your expenses. Do not dip into the areas where you have built up wealth and equity. Continue to make investments, particularly in places where you can get some sort of extra bonus for it. Like if you have a 401k matching plan from your employer, definitely max that out, even though the market is going to be choppy for some period of time. If you have your employer matching that, that's going to be a good benefit for you. So you need to be doing those things. And also really be thinking, especially, Jesse, on the trajectory that we've talked about for a while, what's happening with the money printing and this country, investing in hard assets, whether that may be some land that has a productive use, maybe some precious metals like gold, things that actually have tangible value that you own, that you can use as a hedge. It doesn't have to be your whole portfolio. It can be 5 or 10%. Talk to a financial advisor to see what makes sense for your risk objectives. But have some of these hard assets as a hedge, because as we know, there is no fiscal responsibility in this country. It is not going to change anytime soon. And you want to make sure that you've got some preparation for that. So it's about the austerity. It's, investing, overspending, and it's about creating some hedges.
Okay, I think you said one thing positive so far, Carol, about housing values, home values. Home values are up.
Yeah, so even though it may seem with these crazy mortgages, mortgage rates, but we've had a huge supply-demand imbalance in housing as well. There was an overbuilding going up into the Great Recession financial crisis, but what happened is after that, they stopped building homes because there was so much supply in the market at that point in time. So the estimates are that we're underbuilt by probably 4 to 5 million units. So between that and all of these corporate buyers who've been flush with cash, who've been coming in and competing with you as an individual to buy a house, there's a little bit of a floor in terms of the pricing. So right now, in order for us to be like in that same place where we were during the Great Recession financial crisis with millions of homes underwater, housing values would have to come down 40 to 45% from where they are now. So that is giving people, again, this feeling that, oh, we're doing well and I've got a lot of room. But again, that's your wealth that you've created, and it may come down some. So don't burn that on, spending on a family trip or something else. Just lock it down for a little while. We are like 99% going to have some sort of a recession or a continued stagflationary period where prices eventually will come down. Wait it out and do not wreck your wealth. We want you to be wealthy in 2023 and beyond.
Support the First TV today and get instant access to exclusive specials like Who is Ron DeSantis, the history of FBI scandals, and America's worst presidents. Visit thefirsttv.com/support or download the First TV app to become a supporter and start watching today.